So we have surveyed 700 energy executives around the world in oil and gas, mining, chemicals, utilities, and agribusiness to capture their sentiment on the energy transition. Their sentiment has drastically shifted. Now, most of the energy executives believe that the ambition for net zero is much further away. In fact, 44% of them believe that net zero can only be achieved post-2070. And only a minority see that achievable by 2050. It's a complete reversal from what we had seen over the past 5 years when we talked to the same people. For the Middle East, actually peak oil is pushed further away as well, as per the energy executive, and they see it happening beyond 2038. So the implication for the Middle East is that oil and gas will continue to play an essential role in the global energy mix, in meeting the growing energy needs of the world. And for our region, it means more investment, more FDI in this sector. So, we come from an era of exuberant enthusiasm on ESG, but today businesses have to face the business fundamentals, which you could say, for instance, return on investment. So when executives look at the return on investment on their energy transition opportunities, actually it is challenged for a set of reasons. Number one, the capital cost continue to increase. Number two, finding the customers that are ready to pay for the energy premium is difficult. And number three, the policy support and the incentive that used to be promised by the various governments around the world are actually receding, increasing the risk on these investments. However, there are pockets of optimism, for instance, on renewable, on energy storage, and on carbon capture and sequestration. Carbon capture and sequestration in our region is very important because it allows for oil and gas assets and infrastructure to be decarbonized. And some countries like the UAE and the Kingdom of Saudi Arabia are actually leaders on that front. ADNOC recently announced a 1.5 million ton CCS project, and Aramco announced one of the largest carbon CCS hub in the world with a capacity of 9 million tons of CO2 capture and sequestration. So AI is really two things for energy executive. First, it's playing into the electricity demand, and second, it's playing as well in a tool to improve the efficiency of their investment. So on the electricity demand front, electricity demand is growing all over the world, both in emerging markets to meet the needs of the population, and in mature markets as well, because their economy is electrifying. And AI needs a lot of data centers, which needs a lot of electricity. So in fact, Bain sees the need for electricity for AI data centers to double by 2027, which will represent 2.6% of the global electricity consumption. On the efficiency front, oil and gas companies and energy companies in the region are using AI to improve the efficiency of their operations and maintenance, their supply chain, with a real effect on their bottom line. So the executives are really using a multi-pronged approach. First, they are, of course, expanding the lifetime of existing energy assets. Second, they are rolling at scale renewables around the world. Third, they are rolling out as well a gas-fired power plant. And last but not least, we are seeing a renaissance around nuclear energy. In our region, actually, nuclear energy is already playing a role. For example, the Baraka nuclear power plant in Abu Dhabi is supplying 60% of the electricity needs of the UAE during winter. So it's already playing its role in our region, and we see that this role increasing.